Oil took a downward turn as concerns eased about Tropical Storm Nate's threat to offshore crude platforms and coastal refineries, while prices broke through a key technical barrier. Futures slipped 3% in New York, bringing this week's decline to the steepest since May. While BP Plc, Chevron Corporation, and other explorers cleared workers from the Gulf of Mexico and refiners in Louisiana braced for Nate to make landfall, forecasters don't expect the storm's strength or track to menace most energy infrastructure. Meanwhile, the US benchmark closed below its 200-a-day moving average, a key technical level. Nate is expected to veer away from generally the bulk of production, so you have the corresponding pullback here in prices, said Bob Georgia, director of the Futures Division at Mizuho Securities USA Incorporated in New York. Meanwhile, traders who focus on chart movements and other technical analysis interpreted crude's drop through its 200-a-day moving average as a sell signal. Oil's brief rally into bull market territory last month is fading from memory amid an OPEC-led effort to whittle away a global glut stretching back to late 2016. Output from the Organization of Petroleum Exporting Countries increased last month, and Libya restarted its biggest oil field. Meanwhile, U.S. crude output reached a 2-year high in the most recent government data. The U.S. still has a supply overhang that needs to be worked off, and on top of that, the world's biggest economy is entering a season of the year when fuel demand typically weakens. They wouldn't call it a glut, but they would definitely call it still oversupplied. West Texas Intermediate for November delivery tumbled $1.50 to settle at $49.29/barrel on the New York Mercantile Exchange, the lowest level in 3 weeks. The U.S. benchmark posted a 4.6% weekly decline. Total volume traded was about 3% above the Brent for December settlement declined $1.38 to end the session at $55.62/barrel on the London-based ICE Futures Europe exchange. The global benchmark crude traded at a premium of $5.97 to December West Texas Intermediate. Nate is on track to strike near New Orleans overnight Saturday. The Louisiana offshore oil port stopped offloading operations. Shell shut its Mars, Ursa, Olympus and Ram Powell platforms, and ConocoPhillips said it would evacuate staff from its Magnolia installation. Phillips 66 single-quote S Alliance refinery was preparing to shut ahead of the storm, while Shell was said to have reduced operating rates at its Norco location. Both plants are in Louisiana. The U.S. oil rig count fell by 2 to 748, according to Baker Hughes data released Friday. Nigerian crude output fell to 1.67 million barrel per day last month from 1.72 million barrel per day in August, according to the Ministry of Petroleum Resources. To get faster updates and the latest news from the oil and gas industry, please subscribe to the YouTube new video channel and connect with us on Facebook, Twitter or LinkedIn.